Hello everyone, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to this members webinar, bringing you up to date on the coronavirus issues and what we think you should be doing to assist your clients to adequately prepare and relaunch their businesses successfully. Let's have a look at some of the update news on COVID-19 that's been discussed or announced by the government or the tax office in the last 10 days or so. The Commissioner of Taxation's announced 7 alternative tests for the determination of eligibility for the JobKeeper program. He's announced that if a business commenced since the comparison periods of March, April, or April, May, June 2019 with 2020, he will issue a alternative decision. If there's been a business acquisition, if there's been a business restructure, if there's been a substantial increase in turnover, if the business was affected by natural disasters, if there has been irregular turnover that is not cyclical, or if it's a sole trader or a small partnership and there's been sickness or leave or other absences that have affected the income generation activities within the sole trader or small partnership. They're the tests. And in fact, the Commissioner has made a statement that the Commissioner cannot determine an alternative decline in turnover test in all circumstances. He then goes on to say, it is only in those circumstances where there is an event or circumstances, be it internal or external to an entity, that is outside the usual business setting for entities of that class, which results in the relevant comparison period in 2019 not being appropriate for the purpose of an entity in the class of entities satisfying the decline in turnover test. So the Commissioner is not going to be interested in entertaining any other type of tests other than the 7 which he has announced. Pardon me. There's also been an announcement that exporters that have been affected by COVID-19 can obtain assistance from Export Finance Australia. This is the Export Finance Insurance Corporation, which was rebadged as Export Finance Australia in 2019. This organisation, which is government owned, has got facilities to assist exporters to obtain funding from their bank. So Export Finance Australia issues guarantees to the bank for businesses to be able to get financial support from their banks that they might not otherwise have been able to obtain. So that's worth looking at for some of your clients. The JobKeeper determination of the 30% drop in turnover has caused a fair bit of debate. And in fact, the Accountants Daily published a interesting article on the 7th of May when they examined the Commissioner's recent ruling of some 94 pages, and they summarised it, I thought, rather well. The ATO's recently released Law Companion ruling may bring some comfort to those who are fretting over their projected GST turnovers. In the ruling, the AT notes that the Commissioner's compliance approach will allow for some tolerance around projection predictions. I'll repeat that, will allow for some tolerance around projection predictions. If it later eventuates that your actual turnover for your turnover test period is greater than your prediction of your projected turnover, you do not lose access to the JobKeeper scheme. The Commissioner will accept your assessment of these turnovers unless he has reason to believe that your calculation of your projected GST turnover was not reasonable. However, a significant difference between the actual turnover and the projected turnover may trigger an inquiry from the ATO. It's well worth reading the whole of that article, and we have it available within the Survival in Difficult Times product package within ESS BIZTOOLS that you can read if you wish. Also, the Tax Office have clarified the eligibility of sole traders. A sole trader that has suffered a 30% drop in turnover in the comparison periods is able to apply for the JobKeeper program. And a director, a adult beneficiary, or a partner in a partnership can access JobKeeper, subject to only one of those persons being able to claim the JobKeeper status per entity, and subject to the person making the claim only being able to claim JobKeeper status on one occasion. So if a director is also an employee of another organisation, and within that organisation as an employee, that director is being paid a JobKeeper payment, then that person is not able to access JobKeeper as a director of a company, even though the company may qualify for JobKeeper because of the 30% reduction. The Industry Research Board, the AusIndustry as it's more commonly known, have extended the registration dates for the 2018-19 registration with AusIndustry that is normally due 10 months after the end of the financial year, which obviously is 30th of April, the following year for 30th of June end dates. That date has been extended now to 30 September 2020. And the other extension that's been granted by AusIndustry relates to applications for findings and overseas findings. So advanced findings and overseas findings. These are part of the research and development process. And for the year ended 30th of June 2020, those applications can be made at any time during the year, and the earlier the better, to be honest. But the deadline date was normally the 30th of June 2020. As long as a provisional application is lodged by the 30 June 2020, the final application can be finalised by 30 September 2020. So that might give you some assistance with some of your clients who are involved in research and development. The ESS BIZTOOLS Survival in Difficult Times package includes the COVID-19 survival plan, which will assist you with some of your clients. And remember that clients can still register. They can register by the 31st of May relative to payments that have been made up to the 8th of May that cover the month of April. And then they can register at other times if they become aware that their turnover in the comparison period has dropped by 30%. So if they find in the month of June that their turnover has reduced by 30%, they can apply then to be registered for JobKeeper. Obviously, they'll only receive the $1,500 per fortnight entitlement from that registration date. Also, please bear in mind that if they wish to avail themselves of the commercial leasing benefit, commercial rental benefit for business premises, that they have to qualify for the JobKeeper program. So that might be very important for some of your clients who might not have thought about it, who might not have any interest in applying for the $1,500 per fortnight wage benefit, but they could very well need that registration, that classification, having been eligible for JobKeeper to pursue negotiations with their landlord relative to rental waivers or rental deferments. Preparing for the end of the lockdown. I thought this is what we would run through today as part of this. Are your clients on track to survive? Their survival is going to be very much governed, I think, by how well they now prepare for the end of the lockdown. In other words, how are they going to be able to relaunch their businesses over the next few months? And we're already seeing signs. Of course, the Prime Minister has announced the 3 steps so that by around the 12th of July, many businesses should be back in operation. Restaurants, cafes, gymnasiums will be able to have 100 people on the premises. Hopefully sporting events, particularly amateur sporting events, children's sporting events, will be reinstated by that date. So what I want to run through now with you is some of the items that I think your clients are going to need your assistance on, with you acting as a chief financial officer, as a mentor and advisor to your clients. None of this is taxation, and I don't think you would have expected that it would be. So communications is very important, that the whole team understand what is happening within the business. They're informed of the rules and they understand how your client's business is going to comply with those rules. Customers, obviously they're important at any time, but in these current circumstances, they are very important to be communicated with, to find out how they're going, what they're likely to be ordering, what sort of products they're interested in obtaining. The suggestion is that some of your clients' team make contact with those clients and get those responses and anything else that's of concern to them or what they're talking about, and that these matters are discussed at a regular daily meeting so that management can determine whether a particular strategy that or problem that one customer has, how it might be applying to other customers that your clients have, so that perhaps they can then implement a total response package on behalf of your client's firm. Simplification and training in whatever remaining lower work time that they may have, where they haven't been as busy, less busy. It's a great idea to be able to to see whether they can simplify any of their processes to make them a bit easier. Or if they've got people still on the payroll because they're being paid the JobKeeper payments, to conduct training programs with them to ensure that when they're able to recommence their business operations, that the lockdown is finished, that they will be able to immediately get back into business mode and create business activity. Key customers obviously are very important, and this is where the feedback should be coming through to the leadership team on some of the suggestions and comments that those people are making. Government assistance. We've talked about this a fair bit of late, but the tax-free booster, your client should already be in operation with it. There was no application required for that particular support program. JobKeeper payments we've referred to earlier in this conversation today. It's well worth monitoring those clients who have not yet registered, who might be borderline cases, to make sure that it's remeasured in subsequent months to see whether they have qualified for the 30% drop in turnover in that particular month, so they could apply at that stage. The alternative tests for JobKeeper, I've summarised those. There is a ruling from the tax office and you can access that. And we have the apprentice trainee subsidy, which has commenced. It operated from the 1st of January through to 30th of September for any apprentice that was employed by a client at 1 March 2020 and that the client had less than 20 employees. The subsidy is 50% of the apprentice or trainees' wages, up to a maximum of $21,000, and that's calculated at $7,000 per quarter for the 3 quarters of the quarter ending March, the quarter ending June, and the quarter ending September. Registrations are now open to register for that scheme. They opened early in April. Cash flow. Cash flow is very important, particularly how your client's going to trade post the lockdown. Businesses need to be closely examining all aspects of their operation. Their expenses, what expenses could be reduced? Examining their investment in inventory. Could some of that stock be liquidated? Have they got surplus assets? Could some of those assets be sold? What's their debtors' days outstanding? Should they be making a concentrated effort on attempting to reduce debtors' days outstanding, which on the latest figures is still extremely high? A few years ago, Australia had the dubious title of having the longest debtors' days outstanding in the world. And the figure then was 56.4 days, according to the Australian government's small business ombudsman, Kate Carnell. Figures were announced recently that Australia's current debtors' days outstanding figure is 56 days. So in 3 years, we've only reduced debtors' days outstanding by 0.4 of a day. We've probably still got the dubious title of having the longest debtors' days outstanding in the world. That's no excuse for inaction, though. And I would suggest that you would be recommending to your clients that they pay close attention to the amount of debt that's owing to them, and they do their utmost to try to get it collected. Financing modelling is very important at this time to review what might happen if the turnover that's expected at the end of the lockdown is 10% or 20% or 30% lower than expectations. What's that going to do to the business? Some of your clients might have elected at this stage not to apply for one of the coronavirus SME guarantee loans, which is the funds that are available from the special funding that the Reserve Bank and the Australian government have made available to the banks and financial institutions. A total of $105 billion has been supplied at an interest rate of 0.25% to the banks and financial institutions. The banks are expected by the government to lend that to SMEs with turnovers under $50 million in tranches of loans of $250,000 maximum for a 3-year period with no security at a low interest rate. I heard yesterday that the banks are charging around 4.5% for that money. It's a pretty good deal for them. And the Commonwealth Government is also guaranteeing 50% of the loan funds. So perhaps when your client's undertaken their cash flow review, and you might well undertake that for them, you may have determined that they do need to access some extra funding, and this could be one of the loan packages that you could talk to that client's banker about and try and fix it in place. To secure these loans, though, your clients are going to need a business plan. It could be a dot point business plan, a budget and a cash flow forecast looking at least the next 3 years, because the Reserve Bank has stipulated that the banks must utilize their normal lending criteria when it comes to assessing these grant applications for these funds. Andrew Geddes made a presentation for us a couple of weeks ago in one of our COVID-19 survival panel webinars being presented by ESS BIZTOOLS. And he gave an example of 3 of his accounting firm clients who had utilized the coronavirus SME guarantee loans to obtain $250,000 in each case from their banks. One was a farmer who said to their accountant, I've put up with drought for 3 or 4 years, and now when there's no activity and I've got no money left, it's rained and I've got paddocks full of grass. I could borrow that $250,000 and buy some cattle and place them into those paddocks, and in 7 or 8 months' time, they'll be nice and fat and ready for market. So the accountant assisted with the business plan, budgets and cash flows, and they were able to secure those funds. Have you got any grazing clients or someone who could do something similar to that? And they would charge the client $2,500 for those professional services. So it was not only helping the client, but also the firm generated fees from it. Another accounting firm has helped the builder. The builder was very reluctant to lose key subcontractors and employees and decided to borrow the $250,000, which is for working capital purposes, and to then build a spec home with that money, working capital, utilizing the skills of the subcontractors and the employees. The plan is to be able to sell that house as soon as it is completed, and hopefully they'll be able to repeat the exercise 1 or 2 more times before the loan has to get repaid. And that was a similar proposal for the farmer with his cattle. The third example that Andrew Geddes used was a hotel operator who said, well, my hotel's shut, it's going to be shut for some time. I would like to borrow the $250,000 and carry out some repairs and maintenance within the premises to make it more friendly, more attractive, so that when we are able to recommence business, I've got a very attractive premise that's available to welcome back my customers. Hopefully, these suggestions might give you some ideas as to how those special government guarantee loans for the funds supplied by the Reserve Bank could be used. Senior leadership teams are very important within your clients' businesses. Now, I know that some of your clients will probably have a senior leadership team of one, but others will have 3 or 4 staff, so they'll be able to nominate 2 people as the senior leadership team. And others, of course, will have more people involved. The senior leadership team should be looking at all aspects of communication, and if they're still working from home, using Zoom or another communication platform as a way of having daily and weekly meetings, and that those meetings should continue once the business is all back together in the premises with a daily huddle to review what is happening in the business and to respond to any problems that the business has. It's very important for team communication, especially where you have some of the team working at home. It can cause some loneliness, some anxiety, some stress. So the suggestion from various human resources experts is that businesses instigate a daily contact utilizing Zoom to make sure everyone's okay and that they're functioning well. And perhaps on a Friday afternoon to have a Zoom drink session to try to keep up team spirit. Pricing strategy could be something that your clients need to look at. Is their pricing strategy and their markup percentages or their charge out rates that they were using prior to this crisis back in January, halfway through February? Seems a long time ago now, doesn't it? Are those strategies going to be appropriate for the new activities from around July, August onwards, October in some instances? Within ESS BIZTOOLS, we have specific job packages that are there for our subscribers to utilize for the calculation of charge out rates for trades to achieve a specified profit, charge out rate for professional service providers to achieve a targeted profit, and a retail shopping product mix and pricing, which obviously has got various types of markups for a retailer to achieve a targeted profit. So why not look at those and help your clients to understand what their pricing strategy should be at this time. Working capital. I think many of our clients and some accountancy firms have found that there was not enough reserve funds when this crisis has hit. And I've heard of some stories where some firms already had 3 months of wages, 3 months of long service leave payments, 3 months of other major payments safely deposited in a bank account that they could draw on if they needed it. Some people have contacted me and indicated they want to establish a similar policy from now on. Perhaps you could talk to your clients about that to understand whether they need some assistance in setting in place an adequate working capital strategy. The JobKeeper negotiations with landlord is another very important area to look at. If your client has qualified for the JobKeeper status because a turnover has dropped by 30%, They don't necessarily have to apply for the fortnightly wages subsidy of $1,500 per fortnight. They can be eligible for JobKeeper and utilise that to be able to have meaningful negotiations with the landlord under the Commercial Tenants Code of Conduct relative to rental waivers or rental deferrals. And as part of all this, you could look at their overall funding requirements. I'm sure that we're all going to find it's rather difficult to borrow from banks as soon as the Reserve Bank funds of $105 billion have been borrowed. And the Reserve Bank in any case has stipulated that any of that money that has not been lent by the banks or financial businesses by the 30th of September this year has to be returned to the Reserve Bank. And looking at some of the media reports as to the loan book that the banks are going to have, primarily with SMEs and other medium-sized businesses, it's pretty obvious, I think, that it's going to be very, very difficult to borrow from banks later this year. So one opportunity that might be there for businesses that are well run, that have a vision, that have a leadership team that is competent, and they have a will to achieve something, could be to look at trying to raise funds from the public, shareholders' funds. So it's worth looking at Section 708 of the Corporations Act, which, as you know, allows a company to raise up to $2 million from a maximum of 20 investors in a 12-month period. We also have, of course, crowdsourced funding equity raising, which allows a company to be able to raise up to $5 million from any number of investors. There is a process that those companies have to go through, and you have all of that material within ESS BIZTOOLS. And there's also early stage innovation companies, which are there to assist young companies who have developed new products, processes, or services to be able to raise capital. And the real benefit there is for investors. And that's been obviously put in place deliberately by the government to attract investors to look at Australian young companies who have developed some new technologies, products or services, because the investors can be eligible to obtain a tax rebate based on the amount of investment that they have made in that company, and there are some limitations as to whether they're a retail investor or a sophisticated investor. And there is also the potential that the original investors, who are at arm's length from the current shareholders, can have their investment that is not liable for any capital gains tax when that investment is ultimately sold, as long as they hold those shares for longer than 12 months after the shares are issued to them. So it's well worthwhile having a good look at that and talking to your clients about their funding arrangements. And one of the big issues that I think you should be talking to your clients about is the concept of a business review meeting. And I don't mean a taxation meeting, maybe one a year for taxation, but a business review meeting every month, or at the very least quarterly, to consider all aspects of the business. The leadership team should be there participating, but you should be encouraging your client that the partner or manager that within your firm that looks after that client should be there. In fact, I think you should be indicating to your client that you could organize those meetings for them on a fee-for-service basis, of course, and make sure that all of the information, the reports are submitted. So this should be a total business review meeting covering operations, investment in assets, working capital, debtors, stock, work in progress, the financial position, where the business is going, productivity, employee issues, everything should be considered. Might take a day, should be minuted, action plans should be prepared. It's a great activity for your accountancy firm to initiate with your clients if you have not already done so. And then to be the managers of that process, especially for clients who do not employ a full-time chief financial officer or accountant. I really commend to you the concept of business review meetings. And one of the key aspects of those meetings will be to identify every quarter 3 projects or ideas that a small subgroup is then going to look at to prepare some costings, to prepare some what if type analysis, to look at whether that project or idea could be converted into an income producing activity for the business. And last but not least in all this is, what is your client's vision? Where do they want to go in the next 3 to 5 years? Are they going to stay where they currently are at a turnover of $2 million and just keep it that and just go up marginally by CPI? Or do they really want to grow their business in a responsible way? And that is generally referred to as scaling up. And that's going to mean they're going to have to pay particular attention to some key concepts. Their leadership team, their team members, motivating and training them, taking the time to sit down to develop the strategies. And as their accountant, I really believe, especially if your client's accepting that you are performing the chief financial officer role, that you should be participating in these meetings with them, developing the strategies. It doesn't matter how much time you spend on developing strategies, unless there is then a real commitment to implementing those strategies, it's all been a waste of time. And if a business wants to grow, they not only develop the strategies, but they then got to implement them. And I'm sure, and I know from my own experience in dealing with clients on this, they will need your assistance to make this happen. Primarily, to start with, is the project manager to make sure decisions that have been made are implemented, because your client will be too busy, and so will many others, members of the management team. And an important question that's also going to be asked in this process is, where's the money coming from? Where's the money coming from to grow the business from a turnover of $2 million to $7 million over the next 3 years? Because you will find, as I'm sure you know, that their investment in working capital will have to increase quite significantly. And that is where the questions that we raised a little bit earlier about capital raising, Section 708 and crowdsource funding equity raising become very, very important. So why not start talking to your clients now about the concept of a monthly business review meeting and the analysis of the client's vision, and trying to get the client to make some decisions as to what he or she believes that their vision should be. There's also a needs checklist that I would commend to you to utilize. You have it within ESS BIZTOOls. It's BAS 017 SME needs checklist. Please use it to talk to your clients. There's no doubt in my mind that now is the time to prepare for the end of the lockdown. There will be activities that need to be looked at by your clients that will not be done in a couple of minutes or a couple of days. So now is the time to seriously talk to them. Most of your clients will have finalised their JobKeeper applications. They need to consider if they also need to get some special loans, which they could utilise the coronavirus SME guarantee loans that I referred to earlier. But then they should be working with you to prepare for how they are going to get back into business, or if they've been able to trade right through this period, how they are going to lift their game when more and more businesses are also back in business operations. If you have any questions on any aspect of what I've said to you today, please send me an email, peter@essbiztools.com.au. Thank you for your support of ESS BizTools and ESS BizGrants. I know that you're all very busy at this stage. I know many of you are stressed out, but keep up the good work. And more particularly, stay safe. Have a great day. Thank you for your support. Goodbye.